All right, guys, I am back again with another Ichimoku Weekly Weather Report for the week of January 10th. So we'll be showing you the forex market, everything for the week of January 10th, and looking at any trade opportunities, trade possibilities, and where the market could and could not go. All right, so what we'll be talking about is using time analysis, price analysis, and observation theory. So we'll be using the three Ichimoku theories, which are, again, your time analysis, your price observation theory, and your wave theory. We're not going to be using a lot of the time analysis, but we'll be heavily in on the wave theory and the price observation theory. We're going to look at current trade setups and possible trade setups throughout the week. And we'll also go over the news and make sure that you guys don't get caught in any trades that you shouldn't be caught in during the news session. So this is a pretty long video, but there's a lot to learn from this video. So hopefully you're able to watch the whole thing, maybe in pieces. But guys, if you enjoy what I'm showing you today, and if you want to continue to see more, please let me know. It encourages me to keep on going forward. And please subscribe to the channel, hit that notification button, give me a thumbs up if you like it. And let's get started with this right now. All right, guys, before I get started, just make sure that you see my disclosure statement here. Make sure you read it and understand it and know that I am not an investment advisor. I am doing and showing everything to you for educational purposes only. If you decide to take upon anything that I am showing or doing today, please do know that I am not an investment advisor, and you need to consult with your own investment advisor so they can help you to consider all relevant risk factors when trading the forex market. All right, guys. So as always, before I get started, I like to always give you a word of encouragement. And today's word comes from Isaiah 6:8. Then I heard the voice of the Lord saying, "Whom shall I send? And who will go for us?" And I said, "Here I am, send me." Seeing the Lord and listening to the praise of the angels, Isaiah realized that he was sinful and unclean before God, with no hope of measuring up to God's holiness. When one of the seraphims touched Isaiah's lips with a hot coal, he told Isaiah that Isaiah's sins were forgiven. The coal did not cleanse him, God did. In response, Isaiah submitted himself entirely to God's service. No matter how difficult his task would be, he said, "Here I am, send me." The painful cleansing process was necessary before Isaiah could fulfill the task to which God was calling him. Today, the cross is our live coal, representing how Jesus' death cleansed us. Before we accept God's call to speak for him to those around us, we must be cleansed as Isaiah was. Confessing our sins and submitting to God's control, letting God purify us may be painful, but we must be purified so that we can truly represent God, who is pure and holy. The more clearly Isaiah saw God, the more aware he became that without God, he was powerless and inadequate to do anything of lasting value. But Isaiah was willing to be God's spokesman. When God calls, will you also say, "Here I am, send me"? God bless. All right, guys, before I get started, I want to make sure you guys can hear me. Can you hear me? All right, good. Very good. Thank you. Ari asked me a question about the order blocks for the Quant Tower. I'll let you know. I have to check after this session. But whatever one allows for the volume, I think you have to have that one. So I'll check on that. But if you go to the site, maybe at the end of this I can check it after I close this out and let you know for sure. Let me get started here. I'm gonna share my screen in a second. Got a few things I'm trying to do here, so hold on one second. Sorry, guys. All right, I'm about to share my screen with you. So you should be able to see my screen. Do you see my screen? Please let me know that. What's up, cash flow? So one person sees my screen, 2 people see my screen, so we must be good. Okay, thank you. Before I start, I just want to make sure you guys understand that what we look at today in trade, things I show you can be affected by news. It can change the market at any time, you know, so you always want to make sure you check that news to make sure what's going on, what you see happening with the market, so that you understand if a trade that you're getting ready to get into all of a sudden goes south on you or north, you know why. It's because you have news. So I never trade during news hours. So where there's news, we're looking at this news today. This is a site called Financial Juice. They asked me to be a part of their kind of like their program thing here. So what I'm showing is the news session that they show. This is a really good site because what they do, they give you a lot of news, and they also have a another section called unusual activity, and then they also have what you call tick strike. So I'll do a session on this tick strike, which is very good, and I'll show you what that's all about. But for news, so today is the 9th. There's some news for the Australian building approval, so there's some Aussie news, but then looking at for the week, there's going to be some major news for the euro, the Aussie, and the Aussie again on Monday, January 10th. So 0500, 7:30, and 7:30 you got Aussie news, big news. So be careful there. January 11th, which would be what? That's Tuesday, right? So Tuesday's news is going to be, the major news is going to be Japan current account news here, the Chinese news coming in at 8:30. So we also have news. The Japanese current account will come in at 6:50. All right. So then you also have on the 12th, which is going to be U.S. news at 8:30, and then 10:30 U.S. news. That's the major news. The January 13th is going to be BOE credit condition, and then U.S. jobless claims. All right. Watch out for that. Then also watch out at 6:50. Actually, yeah, 6:50. It's going to be Japanese PPI, Chinese trade balance, Chinese imports, Chinese exports. And then January 14th, a lot of news on the 14th, which is going to be UK at 2 o'clock in the morning. You got 1, 2, 3, 4 events. And then 8:30, you got US retail sales. And then 9:15, US news again. And then 10 o'clock, University of Michigan sentiment preliminary. All right, so I don't know much about that. But yes, that's what you want to look out for. So anything we talk about today could be affected by the news events that you may see happening on this chart here, on this screen. So always make sure you know what news is coming up before you get into a trade. The first thing you should do in the morning is when you get up, here's my routine. I get up, I pray first. After I pray, I go down here, get my coffee and oatmeal, come back, look at the charts. First thing I look at, I do not look at a chart first. I look at the news first, because I want to know if I'm getting into a trade today at 10:30 or 11 o'clock, if there's going to be news at that time or news coming up. So I get into a trade at 11:30 and there's news at 12:40, I might be in trouble. Okay, so you want to know what you got going on. So let's go ahead and get to our next screens here, which is going to be our charts. And here we are. So I'm starting off today. I'm going to be using TradingView charts today for one reason, because I want to show you guys something with cumulative volume. And then I'm going to go back to the Quantower charts. I prefer the Quantower chart, but there are some tools that you can use with TradingView that you're not going to have with Quantower. But Quantower is very professional trading software program. All right. And I really enjoy using it. But I'm looking at the Aussie Cad. So we're going to start off with the Aussie Cad. You see two things on my chart and you're probably like, what are those two things? Okay. I'm going to tell you what both of them are. One of them is cumulative volume. So you probably haven't seen me use this one. You've probably seen me use a different cumulative volume. All right. But this one is based off of, this is cumulative volume, but they're using, as you can tell, they're using Heikin-Ashi candles, right? So they're using the average price charts. So the Heikin-Ashi is average price. So every candle's like when you see these candles and it's based off of the cumulative volume. But when a candle opens up, the next candle opens up at the midpoint of the body of the previous candle. That's how Heikin-Ashi works. It opens in the midpoint of each candle. So then you can see that OBV is on the bottom here now. So this is cumulative volume and OBV. Why do I got them both on my chart? All right, I'm going to tell you. So the cumulative volume, which is also known as the on balance volume, it's simply the running total of the day's volume. So that's what you get with that. So if the market goes up, then the day's volume is added to the total. All right, and if the market goes down, then the day's volume is subtracted from the total. So in this way, it helps you to see supply and demand more clearly and easily. So therefore, these are both the same indicators. And I just wanted to put this on to show you today and show you how it moves and what you're seeing. So when you look at this chart, this movement is the exact same, right? See this movement? It's the exact same. So therefore, when you're looking at when you're looking at the cumulative volume, you're looking at on balance volume, basically the same thing. So let's look at this real quick. And this is what I wanted to show you today, because that's when we talk about trading, the most things that I look at are going to be divergences. I'm going to look at support and resistance levels. And when I look to get into a trade, a lot of times if I see a bottom or a double bottom or a double top or something like that, or a flat market, I want to see if there's any kind of supply or demand coming into the market. I want to see if there's a divergence. So if the market's showing me one thing, but the volume, on balance volume, or the cumulative volume is showing me something else, then I'm gonna know what the market is really trying to do, because this is showing me what the smart money is doing, the institutional traders. Okay. So give me 1 second here. Hold on 1 second. I'm gonna add something else to my chart so I could see you guys. I want this on my chart. I don't know if you guys could see it, but now I can see you guys if you chat to me. So I think you guys might see that. Move it right there like this. And now I can see anything that you guys chat to me. So if you have any questions, just chat them out to me. All right. Let me see if that stays on. Yeah, that stays on when I click my screen. So we're good. So looking at this Aussie Cad, let's go to the, I'm going to get rid of one of these because we're only going to use this upper one, but I just wanted to show you and help you to understand what this is. So let me also show you one last thing here. So a lot of times we've been using the CVO. All right, so let's bring that up. Indicator. Go to CVO. I didn't mean to click it twice, but we're going to get rid of one of those. And we're not going to keep any of these on our chart. I'm just showing you the comparison. So this is the CVO. This is also cumulative volume, okay? So you can have either one of these three on your chart to basically get the same thing that I'm getting, to see the same thing I'm seeing, or understand the same thing I'm seeing. I'm basically looking for that supply and demand. Okay, so that's what I'm looking at. So do I still use Williams percent, or I use the CMO? So you should know what the CMO is. It's on the chart right now. I don't even need it on the bottom because we turned it into a indicator where we're able to just read the chart, the candles. So that you should be up to that. That's been old news. All right. So, and if you're not up to it, I think you could probably find something on the blog maybe. All right. But anyway, look, so here we go. This is cumulative volume. This is cumulative volume. This is cumulative volume. This is on balance volume. This is on balance volume. This is on balance volume. This is the on balance volume indicator showing me the exact same thing as the cumulative volume. Both of these are cumulative volume. This is the oscillator and this is the candles. Okay, so now you can decide which one you want to use. All right, but you want to be looking for the same types of things that I'm looking at or looking for. So therefore, let's rid ourselves of some of these things. Actually, let me just do something first. So when we look at this one doesn't adjust enough for me. But let's look at what we're looking at, basically, what we really want to see so we understand what's happening with the market. All right. So see the market here. The market from this point to this point dropped down. All right. And then it started to move up. So if we back up here, we could see the market dropped. And this one pretty much was even with the market. This one was even. It shouldn't be even. All right. But then when you look at the unbalanced volume and this one also cumulative volume, they're both a little bit different. What they're showing me is this. Increasing in demand. Increase in demand. You guys see that? You see that on the chart? I don't know if you guys could see that. Okay, thank you. So you could see the increase in demand showing right here by the indicator, by the oscillator, by the bars increasing to the upside. All right, and then what happened to the market? The market went to the upside. This is the kinds of things we're trading with, looking for, and going to be doing throughout this session. And every time I trade, each and every day, whatever I look for, I'm always looking for that divergence. So you could decide which one of these you want to use. I believe you could use any one of these that you want, and you'll still get pretty much the same results that I'm getting. You'll see the same things. Now, the one difference is, all right, so this one, if you wanted to look at the trend and understand which way the trend is, they're all pretty much telling you the direction of the trend, and they're all showing you if you should remain bearish or bullish pretty much. Because if I got into a short trade, let's say I was looking to short the market here. Actually, let's go with this point, because this is, we had a crossover, and we were talking about looking for a long opportunity. Well, at this point, we got green Heikin-Ashi cumulative volume bars. All right, and they stayed green. All right, and then on the bottom here, this next one, the OBV right here, turned green and stayed green to this point. So it turned green here and stayed pretty much green till this point. All right, and then your cumulative volume on the bottom here, this is a little bit different. Now, this is where it started to show, this was the low of cumulative volume, but then you could see the increase. All right, so again, you could see where it started to increase, and that's where price started to move to the upside also. So it started right there. It started right here, and then price moved to the upside starting right, basically right here. All right, so once we broke the zero level, then we started to see green bars. That let me know from this point all the way up till now, really, basically till this point, because look what we're seeing here. We see increase in demand, then demand leveled off, and then demand started to drop off and supply started to increase. And that's what you got right here. Increase in supply. This is showing you the exact same thing, and you see the red candles. Therefore, you would stay short because you could see these Heikin-Ashi bars are red. Here, this one is a little bit different. You really don't, and I'm not saying use this for exactly entering the market, because we're going to use CMO, or we could use GAN or something else. All right, so I'm pretty much using CMO. If I'm going to, now I'm trading different ways. It depends on what I'm trading. And we're talking about forex. So I'm telling you the way I'm trading forex. If I'm trading futures, I'm trading on a daily, I'm trading intraday. So I'm trading a little bit different, but the same concepts. I'm looking for divergences. All right. I'm looking for flat levels where I could trade the market, but I'm not using Ichimoku pretty much. Sometimes I do, and most of the time I don't, because I feel like I just need to see the market and be able to do what I need to do quickly and do it that way. But on a longer time frame, and I'm trading the Aussie Cad or something like this, the forex market, I'm going to use, and I'm trading a daily time frame, I'm going to definitely use what I'm showing you right here. This is how I'm trading the market. Now I can also do the same things I'm showing you on a lower time frame, maybe a 5-minute time frame, 15-minute time frame, half-hour time frame, whatever, hourly time frame, 4-hour time frame. Nothing changes. With the time frame may change, but the concepts don't change. So this, I want to make sure you guys understand that. And so then we could move on. So again, any of these you can use. I'm going to take all of these off my chart except one. I'm going to remove that one. I'm going to remove this one. And I'm going to go with this today. All right. So this is what we'll be using. Okay. And this one doesn't adjust real well with the chart. I have to always adjust it to get it where I want it, or see the candles bigger. So now let's do some analysis here and see what's happening with the market. So previously I had thought that the market might, well, when we were up here, we kind of knew that the market was getting too far from Tinkerson-Keatingson. So you had a big gap here, which was a C clamp. So that clamp is now closing and the market's showing you. So here was the C clamp, right? When we had this, at this point, we had a C clamp because we got too much distance right here. This distance from here to here is too much. So we had found a top. And then when the market breaks the low, we realize we have a top, right? So when the market violates this low, we already realize we have a top because we have a big C clamp formation with this gap between your Tinkerson and Keatingson. Therefore, the market drops. So I didn't trade that, and I don't usually trade. I don't trade counter to the market a lot of times. Now, you could have said this was a bearish market, but the immediate term, it was bullish at this point. And yes, I could have got back into the market. I could have put some trend lines here and traded. But I wanted to make sure we weren't getting a change of direction. And I'm still not sure yet. But when I go to the higher time frame, it's going to give me more validity what's happening with this market. So that's what I'm about to do. I'm about to take you to the weekly time frame. So based on the weekly time frame, this is still very bearish. All right. And it's showing really well. Let me come up here. Is there an indicator you can pair with OBV to determine supply and demand? You're seeing supply and demand with the OBV. That's what you're seeing, basically, the supply and demand. That you're seeing it right here. This is increasing demand. This is decreasing demand, increasing supply. This is increasing demand, right? You're seeing it right there. And there's nothing that I would say you compare with it. Now, the thing that I would look at is when we look at my other charts, when I'm using the order block zones, because that's true to the fact order blocks showing supply and demand for sure. But what we're looking at here is a bearish market on the weekly time frame, and I don't see any change happening. So the market may drop even lower. Now, I think we're going to go lower than this point, but I'm going to mark this low level here. All right. And it's kind of like a support area here a little bit. So maybe we drop into this zone. We do have a thick cloud. I told you that thick clouds are going to represent. Let's replay this. And I didn't even go back far enough. So let's go back far enough. Let's go back right here, right? Let's go back to where this high was, first of all. So when we got this high, I'm always going to preach this to you. So there's a couple things you could look at. When we got this high, we did see strong supply demand in the market, but we also saw Ichimoku was showing us a big giant cloud that was really thick. So span A and B were far apart. Span A was still angling to the upside, so we still had some high, and then span B just angled a little bit. This is still a problem for me because the cloud is so thick. So when you got a thick cloud like that, then you can think you may have a top, all right? Because you shouldn't have a thick cloud like this. When you're angling to the downside or upside, look how the cloud is. It's not thick like this. So, and you could see that anywhere on the chart. So when we look at this and we see this, I mean, I'm still going to trade the direction of the chart, but I'm going to start to be worried at this point. And then you could see what's starting to happen. All right. And you could see that the market starts to fall. Now, we didn't have a big C clamp like we did here. Look at this distance. All right. And then the market dropped a little bit and then corrected and then starting to drop now. All right. And this is showing me that now supply is coming into the market. And then you can use the CVO that we were using previously, and it may help you to see this even better. I'm using this today because I wanted to show you how you can trade with these candles. You want to be trading the direction of the Heikin-Ashi candles, either bullish or bearish. So now you really want to be trading the red candles bearish. So I just want to show you that thick cloud. And if you follow that, you could see what the candle's doing here. If you follow these candles, the direction, that's the way the market is moving. And that's what it's showing you, the supply and demand right there. That's it right there. So if you go against that, then you're probably going to have some issues. And so now you see how thick the cloud was, and now you see that we dropped. That was my main point. Whenever you get to a bottom or a top, look to see how the cloud looks, and if it's really thick and so forth. And if it is, you probably reached a top or a bottom, quite possibly, or else you're going to range up there and flatten out until it all catches up with each other. All right. So I'm going to show you now. This cloud isn't really that thick, so I don't believe we found a bottom. It's flat, but we still have a little bit of angulation on span A. Span B is flat, and it's not super thick. If span B starts to roll down, then we're continuing to the downside. I believe we do see more downside to this point, at least this point. Okay, so that's looking at the weekly. So if we go back to the daily, then I think we see the market drop down into this area. And you can see there's too many crossovers with this cloud. That means we're kind of flat. From this point, really, you really weren't really doing much. You could really look at the market and say it didn't do much from this point except make this low, but stayed flat right here. See? And it kind of stayed in between this area right here. So from this point, really, you were like in here. One time you broke below, and I think you're heading that way again. So I think you're pretty bearish. You had a big C clamp here with a thick cloud, but this was a bottom cloud. This was for this point here. So that's where we corrected, and now we're coming down. You're crossing over. There's too many crossovers. It's flat. I believe the market's heading down to this way. We violated Kijun-sen, and we have angulation on the cloud. We have angulation on Tenkan-sen. There's nothing to show me that we're going to see the market move to the upside. I continue to believe it's going to move to the downside, and there's nothing to show me that it's going to change. All right, let's look at this volume again. This one I have to always open it up. So there you see, you should be trading with, first of all, with the direction, right? So you should be trading the direction. You can see the direction. And you should be trading the colors. And you would be, if you were doing that, you'd be right in line with this. So if you keep looking for the changeover and say, well, the market's going to change and move to the upside because we stopped here and started moving up a little bit here, then you're always going to be following the wrong side of the market. Okay. You're going to be looking for the wrong trade. And another thing that's going to help you and show you is what? What else is going to show you that? Anybody know? My candles, anyone know what the candle things are? So if you were looking to go long, what would you be looking for with right now if we were using CMO? No, we wouldn't look for gray. We would look for green. We would be looking for a green candle from the CMO. All right. So when we get here, if we would have gotten a green candle, we would have felt that we had the momentum to move to the upside. But that momentum never kicked in. All right. It wasn't enough momentum to get us moving through this TK zone. So we were inside the TK zone, never broke back above the TK zone, stayed below it, and then you got angulation like crazy and the market dropped. Now maybe we do correct a little bit, but I still am looking at this lower level. All right, because the weekly was so strong to the downside. All right, so let's move on to the Aussie Swiss Franc. Let's go to the daily, to the weekly time frame first. So again, weekly time frame, very bearish, right? Very bearish. So again, let's look at this CMO. I mean, sorry, I'm calling this the CMO. Let's look at this cumulative volume. So what if we just followed it, right, and traded when the candles are red, we stay that direction because we know that's where the the supply is taking over. You would be right here all bearish. So pretty much let's mark that level so we can see where the market showed the strength in supply. Pretty much to this point, you would have been following right. So if you get here and you start to think, well, I'm getting a Keynesian bounce, the market's going to change because we're bullish here and we're going to bounce on this fractal, because this is the way I trade. This is what I'm thinking. This is what I would have been saying to you. We're going to bounce on this fractal level right here. So let's look for the bounce here, but there's no signs of a bounce here. All right, there's no signs. And if you would have automatically start trying to trade the bounce, you'd have been wrong. And then if you would have looked for CMO to give you an entry, you would have got it right there and you would have been wrong again. All right, because you're going against what the strength of the market is. The strength of the market is showing you it's strong supply right now. Okay. And then you would see the demand take over a little bit. Let's say it started to really take over right there to this point, right? And when you look at that, there it is right here. So pretty much that little move there. So understand when you're seeing a correction and a continuation of the trend. Hold on, I got too much noise in here. Let me quiet something down. Hold on 1 second, guys. Sorry about that. So again, that's what you're looking at. So when you see the cumulative volume down here, please try not to go against it. All right. So when you set up your trade, if you don't have the supply or demand on your side, don't try to go against it. Go with it. Okay. Because here, right here, I would have probably been looking for a bounce, and because you got a rejection off of your cloud and your TK crossover is bearish, and then you could see this rejection candle. So then we're probably setting up a trade for the downside, and we probably would have started looking here. But for sure, the market showed that demand, that supply right here, started showing it right there, right? And then the market was, you saw that supply kick in. So we're still showing supply, but now it looks like maybe, especially when you're starting to see smaller Heikin-Ashi candles, we might be finding a bottom, but I'm not going to say we are. All right, so I'm not definitely going to tell you we are finding a bottom. I still see a little angulation to the downside. Now the cloud has flattened out. Span A is angling to the downside. We had we started to see decrease. We started to see decreased supply, and then now it looks like maybe it's picking up a little bit. So I would be careful here. I want to make sure. OBV doesn't show red or green. No, it doesn't. But you don't need it to show you red or green. You just need to see the direction. That's what the direction of the money is. That's the money direction, the smart money. OBV is going to show you the same direction that I'm showing you. That's what I wanted. That's why I showed you that in the beginning, so you would see that and understand that. So therefore, you're seeing the exact same thing that I'm seeing here, but except I'm seeing these candles. Now I can change these to regular candles and show you what that looks like. I don't like the regular candle look. We're on Heikin-Ashi. If we change it to regular, there you go. But it's still showing me the same thing. All right, but the Heikin-Ashi is showing me to stay with the trend, pretty much like you would if you had them on your chart. Now, the only thing with Heikin-Ashi up here on my chart, they're half range candles, so I don't like trading with them because they're slow. The first thing is they're not where the market usually is. Sometimes the Heikin-Ashi candle is painting the half point. All right. And that's not where I want to see the market. I want to see the market where it is. Now, when I'm looking at this volume, I don't mind seeing that because I still see the price of the market and I can understand that. This is looking at what's in a longer term. This is looking at what I want to do immediately. So let's take this to the daily time frame because we're bearish pretty much. And if we're saying we're bearish, I don't see much of anything happening in this market right now. I don't see any divergence, right? I don't see any divergence here. Actually, a slight divergence. This is higher, this is even. Okay, so I don't like the long move right now. I'm just pretty flat. In order for me to start seeing change, I would have to get above, pretty much close above the cloud, because here's our highs. So we're kind of like between this level right here before we could really understand what the market is doing, because this is where the market is pretty flat right now. You don't have any strength right now because you got a flat Kijun-sen. Tenkan-sen is flat. Your cloud is pretty much flat, right? It's pretty much flat. It's just like this. It's in this area. So we don't want that. We want to see angulation, or angulation to the upside, and we want Tenkan-sen and Kijun-sen to either show us some angulation. All right, and if we break levels with angulation, then that's a good thing. That's what we want to see. But currently we're inside this area right here. We're not doing anything, and there's no, I can't give you anything on that. All right, so no, I don't know what the market's going to do here. I don't like it, and I wouldn't trade it right now until it defines itself. All right, so here's the Aussie Yen. Let's go to the weekly time frame right off the bat. On the weekly time frame, you can see I got some levels marked, pretty much seeing this triangle pattern, basically a symmetrical triangle pattern. But really what it is if I'm talking Ichimoku concept, it's basically cash flow. You probably know what it is. What is this formation? Tell me what this, yeah, cash flow told you what it is. It's a P wave. This is a P wave formation, and a lot of people might know it as a symmetrical triangle, but it's a P wave when we're talking Ichimoku. So again, concepts in Ichimoku are something else, pretty much the same thing as something else that you may know different. So this is a P wave. All right, it's basically a fluctuation pattern, a fluctuation wave. Your P wave and Y waves are fluctuation waves, and those are waves that we can see the market bouncing off of this low, this high, this low, this high. So maybe we see the market drop back to the downside, right? Let's see what the volume is, what the cumulative volume is showing us. It's still going in the direction that we're going. Now we get a correction here, it looks like, and that was what we see happening. And then maybe once we see what happens at this level. So let's go to the daily time frame. So on the daily time frame, you could see we already bounced off of the upper P wave level already, see? So it already honored this level, and you could see its fluctuation. You know why we can tell it's fluctuation? First of all, you can see all the things that I talk about and tell you happening on this chart. All right. I talked about a thick cloud on the top or bottom. There's a thick cloud on the bottom. I talk about a thick cloud on the top or bottom. Here's a thick cloud on the top. All right. I talk about a thick cloud on the top or bottom. Here's a thick cloud on the bottom. Remember, the cloud's ahead of us. So therefore, this is where we are. So we got a bottom with a thick cloud. We got a top with a thick cloud. We got a bottom with a thick cloud. We shouldn't have that. If we're moving to the upside, we should see that. We should see this, right? Instead, we see this big, thick cloud represents this area. Big, thick cloud represents this area. And you had a double top up here. This cloud here represented this level here, and then the market moved higher. All right, so that's a lot of scribble scrabble, but that's what it is. Do you understand what I'm talking about? Right? Hopefully you guys understand. If you don't understand, please let me know. And then another thing is the other problem is Sure, we had the move, and this is a daily time frame. So we had this move. We'll move back to here. But now you have this. You shouldn't have this crossover and then another crossover. Too many crossovers. You want to see this with only one crossover and removed. All right. You don't want to move and then crossover and then don't go anywhere and then crossover and then you get another move and then a crossover. The market's flat at that point. You're not going anywhere. So this is fluctuation. All right. But there are levels that we can trade off, and we're kind of late to trade the downside off of the P wave formation. All right. So we're kind of late with that. And we're talking about Ichimoku, but I don't even need Ichimoku on my chart to explain this formation to you. It's market stuff, period. It's technical analysis, market structure, market flow. I don't need Ichimoku on there to see that wave. I don't need that on there. I don't need it on here to see this wave, for sure. This is all market pattern stuff. All right. So when we put Ichimoku on there, it's just because that's what we're trading, directional bias. All right. And then we have it on the chart. So I don't like all the crossovers, and I do again see the big C clamp. So remember, we found a top right here, and we also had a thick cloud, and we got distance. See that distance? And so we get the drop off of the upper level. I don't really know where the market's going to right now. To me, I would say, I don't know if when we're going to break out of this formation, but here's what I think could happen. So we could go all the way back down here. I don't see a lot of we're kind of flattening out. So we could get to that level, but I don't know if we will. And then we could see the breakout of the P wave. All right. But then also here's another thing that we should watch for. Watch for this level, because this level is going to tell us, this level could give us a lot of clues to what's happening in the market. Our level here, which is going to be our fractal level. So if we get a fractal trade, I need somebody to tell me what that fractal trade is. Cash flow, can you tell me what that fractal trade would be? Yeah, so what would the formation be in, if we're talking Ichimoku? What would that formation be though? Right. So I know cash flow knows this. That's why I asked him, but he just told me what it would be, and you guys can see what it is. If we're going to bounce on that fractal, it's going to be what? It's going to be a S wave right here. This is my favorite trade, the S wave trade. Again, I always say it looks like a Z, but it's called an S wave trade. It's a S wave. All right. So therefore, that's one thing we're going to be looking for. Somebody asked me if we could trade both ways of the, if you're trading, take Ichimoku off your chart, right? And because you're in fluctuation, right? So you're in fluctuation. You're asking me, do you trade the downside of P wave or upside or both? You can trade both, because it's basically structure that you're looking at. It's like looking at trend lines, basically. So basically, if you just had trend lines on your charts, wouldn't you trade them, right? So you could trade these trend lines. You can trade these upper and lower levels, but you have to see the wave to do it. And if you, I might not have seen it on my daily time frame in time to trade it, but I would have probably seen it quicker on my weekly time frame if I look at it, to be able to trade down when we got here. I wouldn't have known of the P wave really until we hit this second time, because this is the second hit and this is the second hit. So now I really can see the P wave, and now I could trade it short off of this daily time frame, and this is where you could have shorted it. You wouldn't have known it was here, this right here, because even if you were drawing a trend line, you wouldn't have drawn it right there. You would have started your trend line like this. If you were just looking at a regular trend line, you would have probably started your trend line here, all right, and went like this, but then it made a new low. So then you would have made this level, and you wouldn't have traded that level yet. So the only time you would have traded this level is when it comes back here. Then you would have traded this level. This upper level, only traded the upper level off of seeing the weekly time frame, but I wouldn't have probably traded off of the daily time frame yet either, because it's the second hit, and once I'm sure of it, I could have shortened it. But what I see here is what I told you. We got a big clamp here, a big C clamp. Okay, with that C clamp, we have a level that we could look for the market to bounce off of. So the thing is, if we can find the market to bounce in this area, then we're going to look to go long at this point. But if not, it's going to violate. We'll get a cloud breakout, and we're probably heading down to this point. So at this point, with fluctuation like this, I can't tell you what's happened with the market. This is the strong level to trade long. Now, if we do trade long, if we do get a long opportunity, this is going to turn into a long school session. Okay, because I'm going to show you what's happening with the market, what could be happening. All right, and what happens, what we look for. So I look for, I don't trade time analysis often because it's very complex, very getting into a lot of different things with time analysis. But the easy thing is the wave analysis, right? And your price observation theory. So your wave theory and your price observation theory, those are easy concepts to understand. The time analysis is not hard to understand, but there's so many different variables with the time analysis. Even with the wave analysis, I can add some variables, but the wave analysis and the time analysis, or the time theory, they have variables that interchange with each other. And then we could get into a long session here. All right. But the basic stuff that we want to focus on is basically, where is the market going to? What is the market doing? What structure are we in? What wave are we in? And so forth. That's what you want to know. So you want to know what the wave is. So right now, what wave are we in? We're in this N wave, right? So if we talked about the market being in the N wave, then now what wave is this? This is the V wave, because here's your wave structure. You have I wave, another I wave added will make a V wave, and then another 3 I waves together make the N wave. That's what we had right here, the N wave. So now we have that change. So starting from here, now we have this. All right. So when we were looking at this market coming down, in order for this to be, so let's say we start here, or we could even start here, but let's say we start here for an N wave. We go down, we go up, right? So in order for that to be an N wave, currently it's a V wave. In order for that to be an N wave, what does it need to do? It needs to violate this low. So therefore it needs to go down like that. Well, it didn't go down like that. All right. So therefore, I'm starting to see a change of direction right here just from seeing that market structure, just from seeing that. So a lot of people who don't know Ichimoku, you know what you would say this is? A 1, 2, 3 reversal. Here's where it took place. We had the 1, we had the 2, we had the 3. So we have the 1, 2, 3. We're good to go. But we need to see the 4. All right. And there's no 4 there. The 4 stopped here, and it can't stop until it gets past this level. So therefore, we may be seeing some kind of a change. So if we think that, we still had the 1, the 2, the 3 downside. So people who trade the 1, 2, 3 formation, stop it right there. Now, so I'm going to go to a new 1, 2, 3. I can't go to a new 1, 2, 3 because you start from the high. The next high is here. There is no 1, 2, 3 there, right? So now I have to go to the low to count. So the low is 1. The next high is 2, 3. That's a 1, 2, 3 reversal because this is the first bullish 1, 2, 3 that we have, which is now really a V wave. A 1, 2, 3 is a V wave. And then shooting for 4 is the N wave. That's a full-blown change of direction right there because you had an N wave structure. And now we got the second part, which is this V wave. Where's this V wave going to end? It could end where it is. It could end here. It could end here. It could end here. Once it ends, then we start to say we have the 1, we have the 2, and then we have the 3, and we're shooting for 4. All right. So we want to see where this market's going to go. Right now, we think that the market could reverse in one of these areas. If it doesn't reverse in one of these areas and breaks the Kijun-sen, we're heading down to here, because then I think we're going to see a bounce on the P wave again, on the bottom of the P wave support level. All right. So how do I find my targets? Well, there's an easy way to find your targets. Go to, if you're using TradingView, just use this tool. Let me show you what it is. It's the trend-based fib extension tool. So just go to use that. Now you got to set your settings like I have. But what's going to happen is I'm going to mark, let's mark the first wave we just saw, the N wave. 1, 2, and 3. This level right here is your N wave level. So when we talk about Ichimoku, we talk about Price Observation Theory levels. The level you're looking at right there, and I've talked about this in every video I'm doing, every video. This is my N wave. This level right here. See where that 1 is? That means it's a 1-to-1 measured move. This leg, let's call this A. I don't know what I was getting ready to make, but that's a crazy A. Let's call this B. This is where I marked the other point. Let's mark this C, right? And then this is D. All it's saying is that AB is going to be equal to CD. And all that means is this. I'll make it even simpler for you. I didn't want to erase that. I wanted to erase that, but I can still work with that. So let's go down here. We're saying that from point A to B is roughly 363 pips, right? So let's take this and move it off to the side. It's 363.5. All we're saying is this: A, B, right here, C is going to be, and D are going to be the same length as AB. So if you want to see that in play, then you take this and you move it to the bottom where C is. So now C and D should be 363 pips. At this point, it's a little bit over. All right, it's a little bit over. But now we're not talking about this to be perfect right on the nose. It's levels that you're going to shoot for. All right, so now let's back this up real quick. So since I told you levels you're going to shoot for, you shoot for that to find the 4 level. All right. So we already had the 1 here. We already have the 2 here. We already have the 3 here. And this is now the 4. If that's the 1, 2, 3, 4, then we have an N wave, period. So now I'm shooting for the 1, 2, 3, 4 again. So now we went from this low. Now we go to this low. 1, 2. This is surely a 2. We don't know where 3 is yet because we don't know if this ended. But let's say it ends there. Then that would be 3. And we're shooting for 4. And that's how I get these targets. All right. So if 3 ends there, or there, this is where we're looking to get into the trade. We're going to see price action get into the trade. We're always trading at the 3 level. And then we're never, ever trading at the 2 level. 2 is a fluctuation point. That's where the market could range. That's where you'll start to see another P wave develop, because what happens is if price can't get through there, it comes down, starts doing stuff like this, and makes a small P wave before maybe breaking to the upside or maybe breaking to the downside. Basic concept, simple concepts. That's why you don't want to trade at that level. You want to be getting out at that level. If it can't break that level, you should be in down here in this area. All right. So if we're in this area, let's say the market ends right here. Here's how you can use this tool. It goes 1, 2, 3 to find your Ichimoku observation theory levels, which would be your N levels and your N level and your E level. There's only going to be 2 levels I look for, but there's 4 levels in reality that we would really look for. And actually there's more than that, but there's 4 main levels. I'll tell you what they are. I'm giving you an Ichimoku class here right now. It's the E level, which is going to be the highest, but there's various E levels. There's E1, E2, E3, and so forth. But we're only worried about E. All right, there's a V level. There's an N level. And then there's an NT level. If we're looking for targets, we say the market could move there, there, or there. Let's pretend that all of these are one of these levels. So let's say that this is your NT level. It's not though. Let's say it was. We would be shooting for that. This is really your N level. This is really your E level. Let's say your V level was here because it's usually near N. You would have all 4 levels on your chart. So when you get into the trade in this area, you know you're going to take profit in this area of the chart. That's how Ichimoku observation theory helps you and works. All right. So does everyone understand that? Am I clear with this? Is this hitting you? And do you understand everything I'm talking about? Or am I getting too deep? E level is what number? I'm not sure what you're asking me by what number. But if you want to, okay, so if you want to use the tool that I'm using, E level is going to be a 161.8. The N level is going to be 1.0. So let's open this up. Let's show you what this is, how you could see this. So your coordinates should be exactly what mine are saying. Actually, no, sorry. Here you go. So you should have these levels on this trend-based fib extension tool. You should have 0, extend lines right. You should have the 0 level. Then you should put in 0.618. You can put these in yourself. Then you should put in 1, and then 2, and then 0.26, and then 1.618. So those are the only, these two levels, this one and this one, are the only ones that I could get to actually come up correct with the Ichimoku Observation Theory levels. I can't get the NT and the V level to come up correct, so I don't use them, because anyway, NT is usually near this level, near the 2. And your V level is usually near the N level. So therefore, I don't use those levels. I only need to see these two levels on my chart. So when I get into a trade, I'm trading it up to here. So when as we go through this session here, if I'm telling you to look for a target, then take your chart. I'm taking my chart and doing what I just showed you with the tool. All right. And then I know that this is automatically the N level, and this is automatically the E level, 161.8. And then any other levels I'm not worried about. So right now with this chart, I think we're going to drop a little bit more, but maybe we find a bottom right here. But I think we drop into this area. Then at this point, I'll start to look for the move higher. If we don't see that move higher, then we're going to see the move drop down to the bottom here. If you're using cumulative volume like I'm using here with the, there's a couple other things you can understand. Don't be looking long yet while this is still red. All right, while you still got red bars painting with the Heikin-Ashi bars, don't be thinking you should be long right now. You shouldn't be long right now. You should be waiting. And don't be thinking you should be long right now until CMO shows you something at least, right? And if CMO shows you something, but you're still seeing your cumulative volume or your unbalanced volume being bearish, then wait, okay? But CMO seems to never fail me. I don't know why, but it just doesn't fail me. Do some of you guys find that to be true? It barely fails us. All right. So let's move on. We're like 3 pairs, and we've only gotten 3 pairs done in however long, almost an hour. My gosh, man, we got some work to do. All right, so we're looking at Aussie New Zealand dollar on the weekly time frame. Starting off on the weekly so we can get the bias of the market, the bigger picture, but it looks a little bit flat because you could see the cloud here is super flat, and we kind of reached the top, but now your TK crossover is bearish. All right, so your futures, you got gray skies, so it's a down day, and I think we're finding a top here. You can see everything, the candles are getting very small here, so we don't know what's really going on yet. We didn't really close much higher than this fractal level. All right, so since we didn't close that much higher than this fractal level, then I still think this is a resistance point here. And you can see it would be a little bit of divergence here, but it's kind of weak. It's a little bit of bearish divergence, so I think we see a little drop. The market drops to the downside a little bit. We are in a flat, pretty much flat market if you really look at it. So let's go to the daily. This level here is a good, see, everything we talk about is happening. What's happening here? Thick cloud, span A is rolling over, span B is flatten out, very thick cloud. One of 2 things are going to happen up here. One is going to be you range up here or you drop. All right, we got distance. Look at your Kiesensen and your Tenkan-sen. All right. You got too much distance. That's big gap. So that's a big C clamp. Therefore, the market will drop or flatten out and range up here. So when I'm looking at this, we're starting to see strong supply coming into the market. So maybe we see this market drop. In order for me to really be sure about the move to the downside, I need to see a close below this level. If not, we probably trying to kind of range in this area. And then we see maybe the market move higher. But that's what I believe is going to happen. You got too much distance, and we're not going to keep moving higher with the separation here because we're out of equilibrium. All right, we're strong one way or the other, and we're not. The market wants to be equal. All right, that's a perfect market when it's in equilibrium. This is not a perfect market. We're going to probably see the drop here at the resistance point. You could see there was some divergence here, and so we might see the drop or the range. So therefore, I would not be looking long on this right yet. And if I was going to look long, I would wait. I would wait for the violation of this level and then the correction back to this level. So if I wanted to be long, let's say the market now decides we move higher, I'm not going to be long on the breakout. I'm going to be long when the market comes back, and then I'm going to be long. So at this point, we're looking for the market to drop down, maybe to Kijinsen, but maybe not that far. We'll see. I'm going to mark some levels where I believe that we could drop to. I'm not going to give you any targets because we're nowhere near what we need to see. We don't have the V wave yet. We only have the I wave and starting maybe a V wave. So I can't even give you any kind of like projections. But the main thing is maybe we stop here. All right. Or maybe we come to this zone. And at these points is where I'll start to look for the market to give me a trade to the upside. All right. And this zone, this zone pretty much lines up with Kijinsen. Okay. You want more trades adding it to your plan. Adding what to your plan? I'm a little bit behind you. Let me know what you were talking about right there. The CVO. Okay. Yes. Yeah. But so guys, watch this because now you could see supply coming into the market, right? And the candle's getting bigger. So we might see this drop. All right. So I definitely wouldn't be long. That's for sure. I would probably just be waiting. And I wouldn't be short because even if it does break on a correction, we don't know how far a correction is going to go or will go. But when we get into a long trade, we're at the lowest point that we believe, and we're trading the direction of the market. This is opposite the market because the trend is upside right now. Now, the big trend might have changed. Yeah, we're starting to see an upside trend. We violated major structures. So I'm thinking we're seeing a move to the upside for sure, but we're probably going to get a correction here and then move to the upside. And that'll get that N wave continued. This was an extended N wave, wasn't it? Look at this N wave. It was super extended. All right. And so now we're in the middle of we're at a V wave. I mean, an I wave right now. We're not at the full N wave. We got the I wave. We're looking for the V wave, and we're saying it could come here or it could come here. And then we'll know where the targets are. That's when we'll start looking for our targets. We have nothing to look for now. So that's what I'm seeing with this Aussie New Zealand dollar. Okay. Let's move on to Aussie USD. Aussie USD. Let's go to the weekly. Very bearish still. All right. Very bearish, but now it's very bearish on Ichimoku. The crossover kind of flat. I still see the downside market here. Okay, CMO gave me a bar that lost momentum. All right, so I lost some momentum by getting a gray bar here. There, like you lost momentum here to the upside, you lost this momentum, and then you started seeing supply coming into the market right here. So we lost some momentum here, and that would be the same thing as this move right here, what we had here. And then now we had this move. I want to start to see, I see we broke this level, first of all. So we have a bearish engulfing on this chart, right? So if we have a bearish engulfing, we look at that as a zone. But I don't need to mark this zone right now because I'm not saying the market's coming back and we trade and go short. Right now, I'm just looking at the market dropping to the downside. We had another zone right here, right? So we're talking about order blocks right here. These are levels where we look at the market to bounce off of, and you can put them on your chart and look for those levels. But currently, since we didn't break above Kijinsen and we have angulation to the downside, now we got angulation here, but not here. That makes the cloud get wider. So we need to see that angulation. If the cloud gets wider, then we're probably finding a bottom here. And if we did come back here, it'd be a double bottom. But I think we're going to see the market drop even lower. So let's mark this low. I think we're going to at least go to this level. So on a daily, I think we get down to this point now, because my thing was when we were moving higher up here, I already told you that I thought the market was going to bounce right here. I already told you this last time. Now we did get the rejection here, but I'm not seeing the supply come. I'm not seeing the demand come into the market right yet. All right. Now I am seeing it directionally, but that's what we had here. But currently I'm still seeing a little bit supply coming into the market. So therefore I'm thinking we're still going to drop. Will we violate this structure? I don't know. Let's see what happens at Kijinsen. So I think the best thing to wait for is to see what happens either at Kijinsen or maybe the breakout. Your cloud is too flat also. So your market is flat. All right. You don't have anything happening. You have no momentum. Look at Kijinsen's flat. Tenkan-sen's aiming to the downside. You don't have momentum to move higher at this point. Not yet. Now, I'm not saying we won't get it this week, but we don't have it right now. This is a great level to trade off of, too, and we do have price action at that level. So that makes me want to say, hey, I'd put my entry above this level and take my trade to the upside, because we have the N wave formation already, one wave, so we know the market direction changed. Then we have the second leg developing because we now have the V wave. We just don't know where it's going to end, because now this could become a directional change if we violate this low here. And then we're probably seeing it come all the way back. All right, so if we're going to see the trade happen in this area, we need to see this level hold. We don't have rolling over all the way yet because we're rolling back down and we're flat here. So not in love with this area yet. And in order for that N wave to stay straight, it needs to stay above that level there. So I don't have anything definite to tell you on this. Sorry. Let's go to the next, which is Cad Swiss Franc. I'm going to move a little faster because I don't want this to turn into a 2-hour video or a 2-hour session. So we talk about fractals, right? We talk about trading at fractal level. Let's go to the weekly first. Look at this Cad Swiss Franc. I can't find this now. There it is. I want to see what we have here. One main thing we look for is, like I told you, divergence. Okay. So we see a move to the downside here. We have that move. Now, we're flat here because look at this level right here. We failed to get through that level, and we're currently failing to get through this level. So we're flat right here. And you know what else is telling us we're flat? Your cloud is telling you you're flat. You have nothing. You know what else is telling us we're flat? You got 1 crossover, 2 crossover, 3 crossover, and getting ready to be another one. So we know we're flat there. So this market is not giving us anything on this time frame, all right, on the weekly time frame. So it's a very flat market, but it just bounced off of a level moving higher, it looks like. So we do have some, and we do got a bigger candle. So this is probably going to see a move a little bit higher. We could be pushing up to this level. Ichimoku is not helping me much here. So let's go to the daily time frame. And that's what we could be seeing happening. Now, if you look at this, we're below the cloud. Couple things to pay attention to. Let me get this back in view. This one doesn't automatically line with the chart. So I see the demand coming in and everything is green. Here was the supply, and this was this area. But now we see demand coming in. We kind of broke a little bit of structure here. We talked about last week, we talked about taking a trade. I mean, not taking a trade, but if the market bounces on this level, it did. It bounced on the fractal level 2 days ago. All right, we broke and then came back to this level that we talked about. And now the market's heading higher. So we already have the N wave. So let's look at the first wave. The N wave structure. This was an N wave reversal. All right. Because it was 1, 2, 3, and then here. In order for it not to be an N wave reversal, what would have to happen was we didn't break this level and the market continues to go lower, because then we would be following this leg. And this did complete the last N wave, but the second attempt at an N wave is what failed. So we started from this high, we go 1, 2, 3. We got the wave, right? Now we're going to look for another wave. 1, 2. we're still in the N wave formation. We could still be down because what happens, we have to violate this to be change of direction. And when we violate, if we do violate that, we're getting a cloud breakout. But the short term right now is bullish because we just have a small N wave develop, right? That was wave 1. Then we're getting ready to have another wave. Let me get that. This is the next wave. We're in it already. So where's the target? Where is it at? Now I can show you because we're talking about this maybe continuing back to the downside. So let's look at this. I had looked at this earlier today, and I want to show you something. So when I use my tool to mark my levels, if I say this was my N wave, right? That first wave stopped right there. See, on the N projection level, right? Stopped right there. See what I'm talking about? This N wave did this. 1, 2, 3, and then hit our level 1 to 1 right there. That's an N wave. That's the N target. Hit right on it, right? So then what happened? The next one was this. We said like this. Now we went from this low. Instead of this low, we moved to this low. So we want to see where this market is going right now. 2. And then 3 is right there. So we want to see where the market's going. Where is it at right now? And where did it reject off of? Already the N value. This is your N value right here, which is the 1-to-1 measured move. You currently have this wave. You completed a full N wave. And if you go any farther, you're just extending. You could get up to the E wave, but the E wave is going to take you up to this double top level. Therefore, I don't know if we're seeing a full-blown move to the upside. I think we're seeing a move to the upside, but in order to break this structure would give us the full-blown move, all right, when we violate that structure. So currently we're at the level where we probably start to see a correction. We could push a little bit higher, but I think we see a correction. If we push higher, we're coming into this area, all right, and we need to break this area for structure to change this market, and then to see a Kumo breakout. Then we'll see we're in a trend to the upside, all right. But until we get that, we're just a little bit of a correction off of this level, and we're heading higher, maybe up into that area. Now the other thing is, you're not getting a directional change until Chikou span breaks above Kijinsen. All right. To break a low, to make a new low, Kijinsen, Chikou span broke below Kijinsen right here. To change this direction, Chikou span needs to break Kijinsen right here. Hasn't happened right yet. So therefore, we may be pushing up to this level, but I think we're still bearish. But currently, we're heading to the upside. I don't know where we're going to correct. I wouldn't be in the trade now. If I'm in the trade, I would have been in here. I would not be getting in a trade here. And I would be waiting to see what's going to happen if we reach this level. Now you got cloud resistance, thick resistance, and you got this level up here. So if you're in it long, you've just reached the N level, the 1-to-1 measured move level. If you're not in it long, you should be waiting. All right, that's where we are. That's what we got. Let's move on. Oh, and also this level right here lines up with your fractals, right? Lines up with your fractals. So we could be pushing up to there and then see the market drop. So you may get a push up to that point. Now, if you're trading a lower time frame, like if you're trading like an hourly or so forth, then you're probably looking for a long to get up to this area. But based off of the daily, we don't take any trade right now. Lower time frame could be seeing a move and getting into a move to the upside, but I'm not going to go through all those time frames. All right, so now we're looking at the Cad Yen. Let's go to the weekly time frame. Weekly time frame is very bullish. All right, everything's in a line. Oh, we're not in a line. Here's what we see happening. So we did get the drop, and now what are we? So in order for this to move higher, we need to break this low, this high. If not, we're going to see this move back to the downside. Doesn't mean we're seeing a full-blown trend, guys, to the downside. It just means that I don't think we break this top. All right. You got divergence at this point. What it's showing me is that the sellers are more in control of this overall market right now. And that's what we're looking at. More supply coming into the market. So in order for things to change, we need to close above this level. All right. And then we need to see that supply keep coming in. Now, what I would be looking for, I would already be in the trade long. All right. Because I already told you and show you that you bounce off of our fractal levels. You would already been in the trade because you would have marked your fractal right here. And you would have been looking for a long trade because you are above the cloud. And if you were looking for that, you would have got an S wave trade. Right? Because what you would have gotten is, here's your fractal, here's the drop, here's the move higher, and then you came back to it. And then now the market moved higher. That's your S wave trade. You came right back to your level. It dropped all the way down here. We know where we want to trade before the market even gets to the level. We automatically know, and what I'm trying to say is this. When the market is right here, what are we saying when the market is right here? And we probably could say, oh, maybe this level. But and this would probably be a 23.6, right? Which means this is a super strong trend. Currently, this is your 50 level. So we dropped a little bit below 50. All right, when I'm talking about fib retracement levels. Okay. So this is automatically my 50. And then I'm saying that the market's going to move down to these fractal levels. So when I'm up here, we already know where we want to trade. We want to catch a long trade either here or here. This was awfully close. That's the 23.6. So we know that that's probably like the trend here is super strong if it's going to only go there. So if we watch the market, we say, well, it might trade there because look how it's reacting. And this was a weekly time frame. So now we probably on the weekly, we probably think we are going to get a correction there. But then it goes lower. All right. So then you could see we're spiking. So now we realize that the market could come back to Kijinsen or the fractal level. Well, it comes back to the fractal level. And therefore, that's where I would have been in the trade. Right now, I'm not going to be in the trade. All right. Because I'm seeing weakness to get back to this level. All right, we do have an N wave, right? So watch this. Look what's happening with structure though. 1, 2, 3. In order to be an N wave, we need to break 2. Because this is 1, this is 2, it's 3, and then we should be looking for 4. Let's look where 4 target is too. See if we're going to make it. But what's happening right here, remember what I told you this level is? Fluctuation. If we can't get through there, then we might start to see that P wave formation, which we ranging up top up here. All right. So let's see where the targets are right here. So if you're in this trade, or even if you're not in this trade, you always have to get through 2 no matter what. So that level is automatic. So the next 2 levels we're looking at are, so we came from this low. Actually, we can mark it from here. And we went to this low. So we have 1, 2, 3. Where's our target? This would be our 1-to-1 right there. So we would be looking at the market getting up to 95.547 if it could get through this level. All right. And we're starting to see bigger candles. So supply demand's coming into the market on the weekly time frame. All right. So but we need to get through 2. So let's mark 2 because we're going to be pushing up for that on the daily. And then let's get rid of this. So that's going to be to the high that we need. So we might be seeing a flatten out market on the weekly, but still have more opportunity to move higher. Let's go to the daily. So daily, you could see a little bit flat. Everything's showing you we're flat. So those levels are good levels. I think the market pushes up to that level. All right. If I look at this indicator, what do I have with this indicator right now? Cash flow, do you know? I'm going to draw a part of it. Then you tell me the rest. I'll start to draw the other part. No, not divergence. We have a P wave. All right. Fluctuation. That's all that is. So that's what the market is too. So we may push up to this level, but again, for me to tell you we're going to get to that level, I believe we would, but the signs are not good right now because the only problem is crossover here, crossover again. Where's your cloud? I mean, I think we get there, but your cloud is flat. Kijinsen's flat. Tenkan-sen's flat. Chikou span just broke above price, and you have highs that you haven't been able to break yet. All right. So this level, I think we get here, but I don't think we break there right off the bat. All right. So I think if you get there, you probably see it correct, and then maybe you break through that later. But I think we get there. I don't love this market right here because it is flat. And also, if we do push back up to this level, I'm going to show you what this is also going to be. If we do push back up to this level. So let's take this off. We'll remove this. This session is long, isn't it, guys? Isn't it too long? You guys think we're too long with these sessions? Because, I mean, I could shorten this stuff. Oh, I got yelled at and they said no. David said no. Okay, good. What we could be seeing is maybe this. What is that? Ascending triangle pattern. That's what we could be seeing, right? So we could be seeing the market push up to this level. So this could be resistance for us. And if we get to that level, we might see the drop. If Kijinsen and Tenkan-sen, if this cloud remains flat like that and we push up to that level, then we probably see the drop. Then start paying attention to these levels. And then maybe the breakout. So for me, like, if I'm trading, I'm not going to get into the trade right now, but if I'm already in the trade, I try to push it to this level, but I'm not going to get into a trade there. I'm flat here. I got flat clouds. I got a little bit of distance, nothing major. So it's not a great trade to push to the top, but I mean, overall, it probably gets to that level. But the better level, the better thing would be if we are fluctuating and we get to this level, maybe we push back down. All right. That would be an opportunity. All right. But then the other thing is, maybe we push back down to this level. So these are levels to look at. But for me, I'd get very comfortable with a good trade once we break the level. Because then I look to come back to the level and then trade. And that would be my S-wave trade again. All right. But currently, I think we get to this level. I just don't have anything great right now. We are boxed in right here. We're inside one candle. All right. I haven't been drawing any order blocks on the chart, but we'll look at those as we continue. All right, so I think maybe we push up to that level still, and then mark these levels on your chart because these are going to be levels where if the market does push off of, you want to mark them as support and resistance and maybe a possible trade. Swiss franc yen on the weekly time frame. Weekly time frame, everything's going just like we thought. Right? Perfect N wave just developed, and it also came back to what? And what do we have? Cash flow. What do we have right here? Another S wave. Yep. We have another S wave trade that could have taken place right here on the weekly time frame. You would have saw this. So what we have here is your fractal level. So we always trade these fractal levels. The market doesn't always come back to these levels, guys, but it's a point to look for. So then you're looking for this. This session is really going to get going because we're seeing this, and then this, and then that was your supposedly your S wave. It looks more like a Z, but that one looked like a drunk Z, but it's still something. All right, so that's what we saw, but then the actual trade was in this area, and it gave us the N wave still, 1, 2, 3, and then the target. So where's this going? Let's see where this is going or could go. It's still a pretty strong trend. Look, we're not getting real thick. We're not getting a lot of separation. Now we may be correcting. So if we're correcting, I'm going to show you where we're going to go back to. But let's look at this right now. 1, 2, 3. Now here's your 1-to-1. So we're looking at overall getting up to 130. All right, 130.272. That's your 1-to-1, right? So if we're saying we're going to get there, let's mark that level so we can look at that on the daily time frame. This is going to be the target that we shoot for. All right. So we're going to shoot for that. But we could. I'm going to mark this fractal. And we're right up on the high of the fractal. So I don't want to really put that, because we are sitting on that level. So I'll just mark it. So now when we go to the daily time frame, we're very bullish. Very bullish. All right, so I like the move. I think we're going to shoot for this target at 132.57. But let's go to the daily. So daily's bullish. We're just getting out of a correction, maybe. We're still in the correction. So I wouldn't be looking long yet. But we're at a good level. But we may drop a little bit more into this, to the Kijun-sen. So we got a little zone here. And if we're going to drop more, I want to start to see these candles change before I think about long opportunity. Right yet, I don't have that opportunity yet, but I'm starting to see some market maybe possibly stalling here. So we're looking to get into a trade in this area. All right, because this is a low fractal, and I think the lowest we go is if we do drop. So we could either catch the trade at Kijun-sen or inside this zone here, but I think the lowest we could go, and I'm not saying it's the definite lowest, the lowest we drop to is maybe here. But I think at this point, see, we're going to start looking for a long trade again, because now when you look at this time frame, this daily time frame, you still have the N wave developing. It's not all the way complete. I don't think the level is complete, because you have this right here. So I think you still have more of this N wave, and let's see what this daily N wave level would be. Let's mark it real quick. Daily wise, I'm thinking we can see this. So daily 1-to-1 is taking us right to the level. Exactly. That's where we're looking to get to. But I don't think we have the opportunity to get into the trade yet. So just be patient. I think we get into it, and just think you're below the TK zone. Your TK zone is your Tenkan-sen, Kijun-sen. We don't want to see this flat and this angling to the upside like this. This is going to look for a correction up here, right here. All right, so therefore we're probably going to see it drop a little bit. All right, we don't want to see that kind of distance, one angling high, one flattened. All right, because therefore you're going to probably see a correction, and you're already getting it. And now you're below the TK zone. Not below the zone, you're in the TK zone, because you're below the Tenkan-sen and above the Kijun-sen. So you're inside this zone right here. This zone is here and here, so you're inside of it. If you made it into a box, you're inside of it. You want to be outside of it. All right, and you could trade at the bottom of it if we get down to the Kijun-sen, and then you would look for that long trade. Clear? All right, let's move on. Man, we're already 5:26 and we haven't gotten anything done. I talk too much. All right, Euro Aussie. Let's go to the weekly time frame. See what we got going on with the weekly. I think we're kind of flat with the weekly. Maybe another P wave here too. See this? Another P wave developing. So a lot of times when you get a P wave on the bottom of an extended move, you're going to get a change of direction. So this was the move down. I think we get the move up. Remember we talk about thick clouds? This cloud was kind of different. This was kind of weird. Big thick cloud, but we found the top and you could see the cloud got thicker, but the market was already dropping at that point. If we go back 26 periods, let's go right to this level. Your cloud right now wasn't thick. You couldn't tell there. It was too, nah, you wouldn't have told on this one. It was already too late. But you could see how thick that cloud is, and you could see we're not going to get higher like that, definitely. And you could see we're now in a P wave structure. So let's go to the daily time frame. And we push. We do believe if we're in this P wave formation, we just bounced off of the bottom. We could have issues getting through Kijinsen. So let's mark that real quick. And then let's look at our daily to see. I want to see us get to the top of this level right here on this move up. So when I go to the daily, I'm thinking the market's going to quite possibly push up to that level. We're bouncing off of this wave. All right. You got a big crossover here that's bearish, but now, and you're flat pretty much. Everything's flat. I can't really tell you what's happening with the market. Too much flatness for me. So I don't know if we're going to even get through and get up to this point. So remember what this level is. It's that weekly Kijinsen. And I said we might have issues getting through that level. So if we can break that, then we probably push to this level. But I think overall we're still a flat market. Now remember how we talk about the thick cloud. See how thick that cloud was, and look what happened. It found the bottom. The market moved higher. So I don't like this. It doesn't show me any signs of momentum or anything. So I'm just not in love with this right now. But if we get through this level here, we're going to get to here. I don't like the way it looks though. All right, so I can't give you much. So let's go on to the next. Let's go to the weekly. Euro Cad. Let's auto this. Let's get this back. No divergence. I thought we might have a P wave here. I think I marked this on the daily. We rejected this level, but again, where do we push up to? Right to the fractal level. This is why I wait for my fractal level trades. I don't trade down here. Down here, I already know where I want to catch my trade. I want to catch it up here. And this is where we look to short, but this is a weekly time frame. And we are a little flat. Kijinsen's flat, Tinkinsen's flat. Could this be a bottom? It's not showing enough to me. Oh, sorry. I'm sorry. Yes, sir. It's not a P wave. It's a Y wave. I marked this. It's a Y wave. So let's go to the daily and see it. So there it is. You could see it a little better. That's a Y wave. First one I've seen in a while. Don't see them a lot. You see a P wave way more than you see a Y wave. Thank you for correcting me. Cashflow knows his stuff. He beyond that thing. Hey, you're wrong with that. That's a Y wave. Yes, sir. I got you. It is a Y wave. I automatically said P wave. I'm so used to saying the P wave and seeing that. But this is a Y wave formation. First one I've seen in quite a while on the charts. So then we think the market's going to pull back down to this level. When we went back to the weekly, we're in the middle here. So yeah, it doesn't tell me much. Off of the daily is where the Y wave structure came stronger to see. All right. And again, we had a nice move up to this level. All right. So back to your fractal level was the trade, and then we moved down. And in this case, we got this big Y wave. So we're probably going to see the market drop even lower. All right. And you could see there's a lot of demand still in this market. I mean, a lot of supply in this market still. So I think we still see this drop. I would short this Kumo breakout on the daily time frame. There isn't any momentum either way. It's flat Tinkinsen, flat Kijinsen, flat cloud. But based off of the structure, we should see the pushback to the downside. So that's what I would be looking for at this point. Man, thank you, man. I really love you saying that, you know. I appreciate that. Cashflow said, learn from the best. and you are the best trader I've seen personally. I appreciate that. I'm not the best, but I always strive to be as best as I can be. And hopefully that I can give you guys everything that I could. So thank you very much. I appreciate that. That really makes you feel good, makes you want to keep doing what you're doing. But anyway, yes, hitting these, I'm thinking we're breaking and getting down to this level. All right. But again, think about the flatness that you see with the cloud and with everything else before you automatically think about breaking this level, because things could change. And also remember news coming up. All right, let's get the Euro Swiss Franc. Let's go to the weekly time frame. Weekly time frame starting to get a gap here. So we may, and this is what I'm starting to see, this cloud is getting big. But only thing is, span A is still aiming to the downside. Span B is flat. So we may have found a bottom. We don't have a lot of space. So we could get another push lower, but we also could be at a bottom because we're getting a thick cloud. If we had even more space with Tinkinson and Keatington, I would say for sure. Now, Keatington's flattened. Tinkinson's still aiming. So if it even drops a little bit more and violates this level, then don't believe you're going to go too much farther. For sure. Let's see if there's any lows that we could say support and resistance on here. Okay, yes, let's look at this. All right, so we're pretty much in this area. Let's mark this as a zone. Let's mark this bottom here. All right, let's mark this as a zone. This is where we're pushing into. And I think, again, I don't think we get much lower than these levels, which then goes to the daily. You're already starting to push up, all right? But we could see another push down. And in order for us to really see a change in structure, we need to violate this level. A change in the trend, we need to violate this level. We need to see the push lower, but failure to break this level, and then a push back higher. That will give us the 1, 2, 3 reversal and a new N wave formation. Doesn't mean we're going to get a full-blown trend, but we're going to get a move high, much higher. All right, and then also you're breaking structure. You haven't broken bullish structure yet, not even yet on the daily time frame for sure. So based off of what we see on the weekly with this big gap and big cloud, we're probably finding a bottom or near a bottom. So if we're believing that, then we could be seeing a push up a little bit higher. To me, I don't trade. I wouldn't take a long trade, even though I'm pretty liking the long trade, but I'm not pretty much liking it based off of Ichimoku. Okay, so based off of Ichimoku, I would wait. First of all, I want to get that N wave also. Now, if I get the N wave, then I would trade it, and it has to not be the N wave. It could be the V wave. So what I need to see is this. So I need to mark this. In order for me to trade to the upside, I need to mark my level, because here's my fractal. So I would mark my fractal level if we violate. See, we're not even through that level yet. That's structure right there. If we can't violate that structure, then we're going to get a push back lower. Remember, I said we could drop even a little bit lower, but I don't think we drop lower than this. So I need to see what happens here. If we violate this, then I would start looking for my bounce off of this. Because when I'm talking about violating, I'm thinking if we break higher, then we push back here, and then we see that. That would give us this N wave right here. All right, but if we can't break that level, then we're still looking at this, which means we didn't break this level, so then we're going to see the market either range here, could do that, or it could break here and get us down into this area. So we have to see what happens here. This will give us a good picture. But right now we see a lot of demand coming into the market. I sure wouldn't be shorting this market right now. That's for sure. All right. Even though the strength of this trend is bearish, I just showed you the weekly is running out of steam. All right. So let's move on. Euro pound. I missed what you were talking about on the left, but so Euro pound weekly. Let's get this auto. Let's find this thing. Where is this thing? Here it is. Very bearish market. Euro pound. And you could see even strong supply in the market right now, and your Heikin-Ashi candles are pretty much bigger. No tops or bottoms on these things. You got big strong moves to the downside. Still have that on the weekly. Everything's angling to the downside. There's no sign of this weakening right now. If anything, let's at least push to this level. At least this is the minimum. So when I go to the daily, now we got a gap here. So this gap, we're probably going to see a correction. Where do we correct back to? But I think overall we're going to get to this level. I don't think we're going right down to this level yet. Let me find this thing. Then open it up so we could see what we got. We got some demand in the market right now. All right, so that's what I'm talking about. I'm thinking we're going to get a move higher. We got distance, got angulation. When we got distance like this, flat cloud still angling to the downside. I think we push back higher. Let's mark these fractal levels here where we push back higher. We could push there, or we could push up into this zone. And at these points, this is where I'll short the market. All right, I'll go back to the downside and I'll shoot for these targets. Now, at this point, once we hit one of these levels, I could also then put my targets with my fib extension tool, my expansion tool here. I'll be able to still make my lower targets. But at this point, I can't because we only have an I wave. We need the V wave to see where the V wave stops, and then the correction. So that part of the V wave becomes the correction. The I wave is the impulse. The V wave is the correction. Then the N wave is the added impulse. And we currently see too much strength to the upside right now. So let's wait to see what levels it's going to hold. Then we can short. We could even move up to the Keynesian level. That would take us all the way back up to this fractal level at that point. Well, inside that zone, this is a big zone. I don't mark zones that big. So those are the levels where I look to get short. All right. It is a bearish market, period. Euro yen, weekly time frame, bullish market. Now there's some issues with this bullish market. Some serious issues already. Starting to see a lot of supply in the market. You could see we made a high here and then a lower high. We might be making another lower high. And we're heading down. All right. Now, how far down? I don't know. But we're flat here, pretty much. Starting to get a gray skies, still blue, but starting to change over. We do have some demand coming into the market. Will it take us beyond this level or this level? All right. If we were going to trade this long, we should have been trading down here. At this point, we don't want to take the long. We just got the Kumo breakout on the weekly. So we could push higher. I just don't like what I'm seeing here. And that doesn't mean we're not going to push higher. I mean, because we could push higher, but don't break these levels. If we push higher, we may not break this level or this level. All right. So we could still push higher. Let's see what this daily is showing us to give us a good idea. So I think daily is bullish, and I think we're pushing higher, just like we said. But I think overall we're going to see the market drop. But I think we're going to see a higher move. I do think we correct because we're kind of extended. All right. We do see good demand in the market. At one point, my candles got smaller. But now they're kind of like inside of each other right here. So maybe we see a correction. We're getting a little bit of distance. We're flat here. Still got a dark cloud. You're getting too many crossovers here. You got a crossover here. Getting ready to have a crossover here. Had a crossover here. And this is where pretty much where we're not looking clean. We're starting to get, we can't break levels. So I'm thinking that we get the correction. Maybe we correct back to this fractal level somewhere in here, take us back to the Keynesian, or maybe we correct here. All right, and then I'm going to look for the market to push higher. All right, at that point, I can mark my 1, 2, 3, and then shoot for my target. All right. Not in love with the trade right yet. Look at this order block right here. Couple in this area. So look at this like right here. So maybe we don't get that much higher. So here's the block. Maybe we push up into here and drop a little bit before finally maybe pushing higher. But what we see on the weekly, right? The weekly may be getting weaker. And we start to see the full move to the downside. That would be a breakout below the cloud. If that's going to be the case, then if we hold at this, if we do hold at this structure here of this order block, then we probably see the move lower. All right, strong demand in the market right now, though. So don't go against that right now. Euro New Zealand dollar, weekly, auto, looking like still bearish, broke above the cloud, box this thing in. Well, this would be a weekly. I'm not going to box it in. But if it was on the daily and we were sitting like this, I would say box this in and let's see which way it breaks. Because we're sitting pretty much in here. That's where we are right now. Let's go to the daily. We're inside that level. Now, what's giving us any kind of determination of where the market could be going? Look at the cloud again. And then look at that Tinkins and Keatons. And the cloud is very thick. So we might have had a top here. We dropped, couldn't break that top. So we're sure that's a top. Thick cloud, no angulation, still angling here. If this starts to roll over, we'll see the drop. We're seeing demand come into the market. So I'm not gonna take a long trade right yet. All right. Even if we get the demand coming into the market and we break, our cloud is going to be very thick unless we get some angulation. So we're probably going to see a range in this area. And if it does break, it's not going to go much farther because I think you'll see this is what I wait for. Then I trade. So this cloud is getting too thick. So what we need to see is span B roll up. It's not happening yet. So it won't happen unless we violate this level. Then maybe we correct and then we can go long. All right. There is some demand coming into the market here. So that's what I wait for. We need to break structure though. We're sitting in between this box just like we drew. All right. And if you want to trade that box, then you have to go to a lower time frame and trade that box. So if you want to trade the box, just go to a lower time frame. Maybe you go down to like an hourly time frame. Let's say we go to an hourly and we could trade this box. You could go to a lower time frame, but I take everything off my chart at that point. And I fix my levels, but you trade these upper and lower levels. All right. Let's go back to the daily. Let's go to the, why doesn't my chart automatically go to auto? Euro USD. Let's go to the weekly time frame real quick. Weekly is very bearish. Could be getting a correction coming up. Quite possibly. Let's see what we got here. You could be getting a correction. So if we're going to move higher on the weekly, we're going to look for it to push up to this level. If it's going to push higher. We're not really thick and we're kind of like bouncing off of Tinkinson. Nice angulation. I want to see a little bit of angulation on Keatonson. I think we're still pretty bearish. And I like the downside move. Let's go to the daily, see what we got. So daily, and what I'm talking about is we'd have to break this structure that we're not violating. We're still sitting in this area. We need to break this structure, and then I think we push up into this area and then drop back to the downside. Based off of the weekly, I don't see the market really moving much past this level. But I mean, it could. We're still pretty bearish. All right. So I think we get a push. Maybe we get a push above this level. If we push, we're going to push to that point because here's your weekly. That's where you'll be looking to push. It doesn't, and nothing's changing. And then back to the downside. Let's go to the pound Aussie. Weekly. Double topping up here. And we're pretty much the same here too. All right, pretty much the same. and we're flat on the weekly. So nothing, kind of like ranging on the weekly. Let's go to the daily, hitting this top right here. This is the thing. So we have some, let's move this down. So we have some demand coming into the market, but we're at a resistance point. We just got our crossover. The cloud's not that thick. We could break this level, and I'm seeing strong demand in the market. I wouldn't be long here because it's not my point where I go long. So if I'm going to go long on this, I would just I'd be patient and wait. I would be going here and then long. All right, when we get back to this level. If we fail, we're going to break below here. Then we're starting to look for the market to come back to structure, and maybe we drop back into this area, then break the level. All right, so at this point, this isn't a good trade for me. I don't trade these levels right here because unless I have divergence, and I don't. All right, so if I had divergence here, I would probably short this at this level. Just price action wise, you could do the same thing here, but to me, I just wait for the trade to move down and then I push it up. Or else I wait for it to break this level and then I catch it here. This isn't the best spot based off of what I see. All right, but we could get that drop. I mean, that's not the best spot to go long. Sorry. It is a good spot to go short. But I'm not going to short it because I think we got too much demand showing still. All right. Let's move on. Pound CAD. I'm getting exhausted. We're on the weekly time frame. Pound CAD, very ugly market. On the weekly, you could see the levels, the main levels where we're looking for the market bouncing in between. So it's pretty flat, really. And you could see we're really flat. So weekly is not giving me much. See if this is telling me anything. Not really. So I'm going to go back to the daily here. Looking at the daily. Let's go auto. Big gap here. A gap here, C-clamp. Not a super thick cloud. But again, the super thick cloud was right here when you reached the bottom. And then the market changed and now you get a correction. I'm looking for the market to drop a little bit. We just starting to see that supply come into the market. All right, you could see supply coming into the market. So therefore, I would be looking for a short. I wouldn't be looking to short this market because I'm going to look for my long, but I believe the market's going to drop. And where are we going to drop to? I'm thinking about these levels right here. This one and maybe here. And then for the long opportunity. Because we're too far, Tinkin and Keatonson too far apart. So what you get is ranging up here or you violate and drop to the downside. You could see us push all the way back to Keatonson, maybe not though. But these are the main levels I would look for. And that's what I would look to trade then. I'm not going to look to trade now. You can see we're flat. There's no momentum. We're too far. The gap's too far. All right. Let's go to the pound Swiss franc. Let's go to the weekly time frame. Weekly time frame. We're getting a bounce off of Keatonson. We pulled up into the strong zone here. We got dark clouds, so we're starting to see bearish market. And we're already breaking structure, making new lower lows. We pushed right up to this level. Now we may be bouncing off of this fractal though. We're right on that fractal. So we're in this area. I think we see the market drop. It's very bearish. It's very flat, really. All right, and we still have some demand coming into the market. It's very flat, really. All right, but our cloud changed to dark. So I don't like no long opportunity on this. TK crossover is bearish. Chiku spans below Keatonson and price. So when I go to my daily, I'm bearish. Now the daily's pushing off of a low. Let's look at what we see. So in order for me to be long on the daily, here's what I need to see. We see strong demand, but we're pushed up to those levels, right? So these are the levels where we're talking about the market still going down. This is a bearish market still. Now Chiku span did break Keatonson right here. and now we're at a level. I think we correct, at least correct. All right, and then let's see if these levels hold. If we correct, these levels hold, this is where I look to get long. If it's going to be that. I don't do anything right now. All right. And I don't even have divergence at those levels. Okay, so I would wait for the market to show itself. Is it going to stay here and not break these levels and then correct back to here? If it does, this is where we go long. Currently, everything's bearish except your crossover is bullish. You got to, well, your future's starting to change over. That's why you need to wait for the correction here. All right, and then you might get the long at this point. Okay, let's go to pound yen. Pound yen, let's look at the weekly. Pound yen weekly. Failing to break this high. Let's see what we got going on here. Might be seeing some divergence. Might be giving us a clue here. All right, we're starting to see divergence. So what this is showing me, see? And now we might have flattened out up here. So this may be a strong resistance point right here, this fractal zone. Might be a strong resistance point. Your cloud is flattening out, so we may be getting a move back to the downside a little bit. Everything's flat here. No momentum to the upside or anything. Your flat Kijinsen, flat Tenkan-sen, they're together flat. And your cloud is flat. And you hit a double top with divergence. So when I see that, I want to go to the weekly, to the daily. I think we're going to be looking at the market dropping. And sure enough, this looks like a dropping market. Let me show you why. Now, I'm not going to trade it based off of Ichimoku, right? Because Ichimoku is going to be, we need to be long on Ichimoku at this point because we're above the cloud. And this is where I don't, like when I see stuff like this, because I think the market's going to drop here. And another thing is you got a thick cloud. That's where we came here and then the market moved higher. You got to cross over here, cross over here, cross over here, then another thick cloud. No angulation. So if you don't have any angulation, you're not moving to the upside. You found a top here you're not able to get through. Okay. I think even if we do push a little higher, you're too far away. All right. You're too far away. Tenkan-sen and Kijinsen. I think we're going to see the market drop. Maybe it corrects back to one of these fractal levels. Which one would I mark? This is the only one I would look at. Other than that, it has to go to Kijinsen. So I'm definitely not in love with the move higher. If it does push higher, it's going to be a bull trap probably. And it's going to move up to this area and might trap you and then drop because we're getting too much distance. All right, you got a big C clamp here. And maybe we push back down to this level. So right now, do not take the long. Don't take the short yet either. I would just wait to see what we get in this area before I trade. Now, trading based off of Ichimoku, I'm going to be long when we get down to here. But based off of price and everything I'm seeing, I'm probably going to be looking at the market dropping. All right, let's get done here. We got a few more. Pound New Zealand dollar. Let's go to weekly. It's a flat market, but it's starting to look like a strong bullish market. See where it is. Let's go to the daily. It is a strong bullish market. Might see a correction here. If we do correct, possibly back to this level. It's a strong bullish market though. But I look for maybe a correction back to this area, which is Kijinsen. So I'm not going to take the long trade right where it is because it's extended to me. And let's see where the move is. We could see how far we are. Because we have an N wave, right? We have our daily N wave. 1, 2, 3, 4. We're probably pretty close to the N level. So we're close to that level. That's where we're going to see that 1-to-1. That's your N target, N value. All right. So you guys have totally sucked it out of me. But I got a little bit more left, so I'm going to push on. I'm just messing with you. I'm good. I'm good to go. I don't mind doing this all day long. Trust me. So again, we're looking at, let's go to the weekly real quick. Pound USD. Where's this thing? So pound USD hitting a strong resistance level, the Kijinsen, and you're also inside of a fractal zone. See the zone? So I don't know which zone we're honoring because there's a couple here. So it looks like we kind of went above this level a little bit. So let's take this zone off the chart. Let's mark this level, this fractal. Right there. That one right there. And Kijinsen. We're angling to the downside. We're bearish. Everything is bearish. Chikou span's below price. Your clouds are bearish. You got dark clouds, so that's down days. But you're inside the cloud. The breakout would be a definite trade for me. But I would be looking to short this market on the weekly time frame like now. Now let's go to the daily and see what that tells us. So the daily is bearish, all right? But Chikou span broke above price. And it broke above Kijinsen. We don't have a lot of separation. And the market is bearish. So I don't know if we get through this level. I don't have a good trade for you right now with this. If I'm going to see this break to the upside, it has to come back and correct for me, or else a breakout below the cloud would be a long. So currently, I'm not going to be long yet, all right, because I think we need to get through those levels. This is a main level right here that we have on the chart. All right, so we want to see that. What I was drawing here with these two lines is I wanted you guys to really see how this divergence really works. All right, so when you see this divergence here, this came back to the level, but you had divergence. First green candle, CMO green candle, the market moved higher. It's against Ichimoku right there. Okay, this is why sometimes your trades aren't you're not gonna get some of the trades that you could. Then when we go back over this area here, there's bearish divergence. All right, so you could see this was flat pretty much. So you were flat here and you were angling to the downside here. Divergence, and the market dropped. Okay, so that's how I use this. Let's clean this up. Let's get here. So let's go to New Zealand dollar CAD. We're almost done, guys. Hang in there. I may just do the daily analysis without putting the week on here because we're getting long-winded. Flat market on the weekly. Some nice levels, but it looks like we're trying to break that level, but we got a flat Kijinsen and a flat cloud. So this may be a strong support level. We may drop like a little bit. We could push that level here and then maybe make it into a zone if we really wanted to. That would be your zone. So let's go to the daily. You're in between that area here, flat cloud, a little bit of extension. It doesn't show like it's going to break this level. I'm starting to see divergence where I'm starting to see bullish divergence. So maybe we are at a bottom and we start to see the market move higher. Ichimoku's not helping me a lot because I'm getting a lot of different signals here. I'm flat. I'm starting to spread. I'm not angling here, but I'm angling here. I'm flat here. My crossover is bullish, but I'm flat with both Tenkan-sen and Kijinsen. Chikou span did not cross price yet, so we may see a bounce in this area. I think we're going to be starting to see a ranging market. So what we might be seeing, and that wouldn't even be a descending triangle pattern because we kind of broke structure a little bit, but that's what we're starting to see, something like that, pretty much. You see where I'm saying? So this is where I'm seeing this low here, maybe pushing back up into this area, then dropping again. All right. Cash flow, thank you. Appreciate you. God bless. All right. So New Zealand dollar, Swiss franc, weekly. It's a bearish market. Crossover is bearish. Your clouds are bearish. It's a bearish market. and you're inside one candle. So I think when you break out of that candle on the weekly, you see the market drop to the downside. We don't have much distance, nothing major. So I'm going to take that off. We'll go to the daily. On the daily here, we're inside that candle again. All right, we don't have much distance. We got a thick cloud. We still got angulation though. So what I'm looking for is a violation of the box. We're inside this box. So you could trade this on a lower time frame, trade off the lower level of these levels. But for me, a good trade would be a break of this level, maybe correct back to that level. So it'd be something like this. But we're still bearish. So you break and then you correct here and then you trade. All right, continuing this downtrend. Crossover is bearish. Another crossover, but it's gonna looks like we're gonna, if that's why we're flat here, because we don't have nothing. You're flat here, but we still have a supply coming into the market. So I think we're gonna break that level. All right, let's move on to the next. New Zealand dollar yen, weekly time frame. Let's move this here. It's a bullish market. But now starting to look like maybe a 1, 2, 3 reversal. So this could be a high, but we'll see. Let's go to the daily. So for me, for the daily to be bullish, we need to break the cloud. We are seeing a 1, 2, 3 reversal because we have a V wave, right? Then that means there. So therefore, we're looking at these levels for a bounce, and we're just sitting on those levels. So some people don't trade Ichimoku below the cloud. When you're below the cloud, you go short. When you're above, you go long. So if you're waiting for that, then you're not going to take a long trade here. But the long trade actually, to me, would be right here, just like this. If we stay like we're, because we got a crossover that's bullish. You're flat, so no momentum. You're starting to roll to the upside and you're getting thinner. You found a bottom here. So maybe if you don't take the long here, then you wait for the Kumo breakout, because you'll break this structure. All right, and you'll take the Kumo breakout, but then you're not trading at the 3 level. You're trading right at the 2 level, because here's 1, 2, 3, and then 4. You'll be trading at the 2 level. All right, so I think we're going to see more upside on the daily time frame. New Zealand dollar USD. Let's just go see what the weekly looks like real quick. Again, it's another bearish market. Has levels right here that are strong to violate to the upside. This is where I think you bounce off of back to the downside. So going on the daily, we're bearish. This may be developing almost like a Y wave here, right? Could be looking like another Y wave. I don't see a lot of these in the market. So if that's the case, we probably see this push back down to these lower levels. Okay. We are getting thick here. We're not rolling over yet. So is this a bottom? Maybe. In order for it not to be, we'll be in this Y wave formation. You're going to get a thick cloud. All right. So we could be seeing this push down or back up to these levels. At this point, I'm not going to trade it. All right. USD CAD. Daily time frame. Mixed signals because our crossover is bullish. Chico spans below price. Future's still bright, but it's flat. All right, so you still got bright clouds, so maybe a break below the cloud would send us to the downside. What's the weekly looking like? Weekly's looking bullish. All right, bouncing off a Kijinsen crossover, breakout above the cloud would be a nice trade. Let's mark that cloud level. Let's mark that level so we can look at it on the next time frame. So back to the daily. This would be the cloud breakout to the upside. Again, this is kind of mixed signals here on the daily. No trade that I like either right now. So I would wait. All right. No trade I like right there. USD Swiss Franc. Weekly. Weekly's looking like another P wave. All right. This is a P wave formation. So we're at the bottom, probably push to the top. Let's go to the daily. Probably seeing that push up to that level. You could see too many crossovers. Ichimoku's not helping you here. So might see the market push up to this level. You could adjust your levels on your time frame. I change them a little bit when I'm on my daily to weekly. I change these levels to line up better. So might see it push back up to here. Ichimoku got too many crossovers. That's a fluctuation market. Crossover here, crossover there, crossover here, crossover, crossover. Not good. All right. So we want to see this continue. If I take Ichimoku off the chart, you probably want to see the market continue back up to this level. These are the levels you would look to trade. All right. You got a P wave structure, and that's what I would look to trade. All right. Let's go to the, we'll look at the Yuan real quick. Let's stay on the daily. Got big news, I think, coming up on this. It's flat. It's pretty much inside of a box right here. Ichimoku's a little flat with this. Let's mark this level, and then we'll move on. Just going to show you how flat this is. We're flat here, and we're pretty much staying in this box here. We broke out a little bit. You can mark those lows if you want. And you're in this box right now. You need to break outside of that box. You're getting a crossover here, and then you cross back over. All right. So you're flat. Need to see a break above that box. You could go to a lower time frame, take Ichimoku off your chart, and trade these highs and lows until you break the box. Other than that, I'm not in love with it. All right. USD JPY, weekly time frame, very bullish. Might see a correction, but no, it's still strong, pretty strong. Got a little rejection here. No, I was trying to use some time analysis back here, but I stopped using it at that point there. Let's mark these fractals real quick. There was one here. We didn't bounce on it, and then this is the next one. We're too close. We just broke these levels, so I don't think we're gonna return that quick. We don't have a lot of gap. I think we're still more pushing higher. Where's the 1-to-1 ratio? Well, we could go from here to here to there. So we'll go here because this is 1, 2, 3, 4. Then this is 1, 2, 3, and then we're shooting for this level here. So we will be shooting for this target on a weekly time frame. So if we're looking for the market to get there on a weekly time frame, the daily time frame is bullish, and I'm thinking we still get to that level. There's no angulation. There's no trade. You should have been trading down here when we broke back above the cloud or broke Kijinsen here. The next level you could look to trade is back at Kijinsen. I just don't see a trade opportunity on this. I see it bullish, maybe here, but let's see what happens at Tinkinson, because we could be getting a Tinkinson bounce also, which would be a bounce of this fractal level. So we might bounce on Tinkinson. If we drop inside the TK zone, then the way to trade it would be you drop inside the zone, then you trade outside of the zone, you trade long. If we're trading, we're going to trade, since we're gray here, if we get a red candle, we're going to wait for the next green candle. That'll give us our CMO entry. We do want to be long. I do see some supply coming into the market, so we're probably going to get a little bit of a correction. At that point, I'm going to go long once I get a CMO entry. All right. And then finally, let's go to Mexican peso. I'm not going to really look at that. It is bearish. Starting to get a thicker cloud. You might be getting a little bottom here before you get a correction. Let's go to the Kron. It's flat. All right. So maybe you're in a little range here. All right. So I don't see anything to trade at this point. I would watch for these levels though. My Kijinsen level. You got a crossover that's bearish, but your future is bright, and then Chico spans below price, but it hasn't violated Kijinsen yet. So that's not good. I already did BTC and USD yesterday or Friday, whatever. So let's go to oil real quick. Let's remove this off the chart. And then let's see where we are. Let's look at the weekly real quick. Weekly oil looks... I can't tell what it looks like. Weekly oil looks bullish, but we got a crossover that's bearish, but that's because we're just coming above. So we could see a little bit of a correction here, but I think we're very bullish. So we're in this leg right now. Here's where we are. So 1, 2, 3. We're still in this leg, continuing. So where could oil move to? Let's see where oil could move to real quick. Oil could move to right up to this top again. So looking at 86,443. I'm not going to get into oil right now because I should have been in it already. But I think it could push up to 86,443 before maybe you see another little correction. But I think oil's still pretty bullish. You could see a lot of demand still coming in with big candles here. So I still think it's going to move higher. It needs to violate 86,443 for me to think that we could get even a bigger move up to about like 101, 165. Okay. So the next one is going to be silver. Silver, let's see what the weekly says. Let's go back to oil. I was showing you on a weekly. Let's go to the daily. See what that daily is showing us. Let's take this off. So on daily, yeah, we're getting a little bit of we got a crossover, so everything's bullish here. I think oil is moving to the upside. We may get a slight correction, but I think if you want to get into oil, your best opportunity is right here. If you want to go long with oil. Oil is a strong move to the upside, if you ask me. And I think we get at least to this point, at least. All right, so I think maybe if you want to catch oil, because you got blue skies, so that's a bullish. You got a crossover that's bullish. Chico Span broke above Tinkinson, Kijinson, and Price. We need to break outside of that cloud. Once we do, we're there. But I think if you get a little correction back into this area, then you could catch that long. At that point, I would definitely long. Now, if it drops even lower, then it could drop into this Kijinson area. But I don't see oil dropping this low. So I'm seeing a bounce on this area is where I'd be looking for my trade. You could see right now we have demand coming into the market. So we may not even correct back to that level. All right. But if I'm going to look for a long trade on oil, I'm looking to get in right here. Right in this area. All right. So look for maybe a little move down a little bit. Correct in here and then shoot for this target right there. With your oil, 84,701. All right, and then we got gold and silver, and then we're done. So here's silver. Let's see what the weekly looks like. Weekly is bearish. Let's go to the daily. The daily is bearish, but it's kind of flat. So there's some levels that it's failing to get through. So these are the levels. All right, you can see we double bottomed out right here. And then we crossed over bullish, but we got a flat cloud, which is dark. Chico Span's inside price, we're ranging. This is a ranging market here. I don't see any opportunity to do anything with this. If anything, it may push back down to this level. But right now, I wouldn't be messing with this. Let's go to gold. Weekly. This is the last one we're looking at. Then we're out. Very flat market. It could also be in a P wave. Let's go from here to here. Let's go from here to here. So we're pretty much trading in this area. Look at the crossover here. Flat cloud, thin cloud, flat cloud. So nothing good on the weekly. Let's go to the daily. You can see these levels. Again, too many crossovers. This is a fluctuation. You don't have any kind of trend going on. Again, I was using time analysis back here. I'm going to get rid of it. I'm not using it right here. And again, I think that your bounce off of these levels are what you want to look for. So I would pretty much take Ichimoku off my chart here. I don't really need it. And I would look for bounces off of these levels. All right. Once you violate, then I would look to trade the violation. So we look for a bounce, or else the market moves higher. Look for the bounce back. But if it violates, then we look for the trade like that. If it violates, then we look for the bounce back and then short. But other than that, you're very flat. I don't have any sure places or anything I would do with it right now. I would probably just wait to see when it gets to one of these levels. All right. But other than that, that's it. So I'm pretty much done. Got through everything. Took me a little while, but got through everything. Hopefully it's helping you guys out. A good over 2-hour class again. We got to get this thing down to a little bit like an hour. But hopefully it's enjoying. You guys are enjoying it. Hopefully you're learning some stuff from it. Do I have any questions before I get out of here? All right, good. I appreciate you guys. So what I'm going to do, Ari, I'll do that in 1 second. What I'm going to do is end this session. And then I'll go straight over there. All right, guys. So I appreciate you guys for being here. And hopefully this is helping you. And until next time, guys, have a great one. God bless. So long.